Hello traders, and welcome to another educational video titled The Long Black Body. Let's examine first the specifications of the long black body. It is located at the end, at the top of a rally. It has small, tiny, or even non-existent shadows. That means upper and lower shadows. Now, the body is of course black, but it's of a long size, meaning that it's above average. And one way to go about it is to double the size of the average body length that you see on your screen. Of course, you don't have to measure it with a tape, but just with a visual inspection. If it's above average, it's double the average size, then this method will do. Another way to go about it is, of course, to take 3 times the body size of the previous candlestick. Excellent. Now that we cleared that up, black body identified at the top of a rally, at the end of a rally, at the end of an uptrend, at the end of an upward correction, it has bearish implications. Good, let's identify it on a real chart, like here, for example, at the end of an upward direction, at the end of an upward rally, we identify a long black body. And of course, the rest is history, as you can witness on the screen. Good. In the next slides, I'm going to explain few strategies just to have them in mind, so they can help you construct your own trading methods, your own systems, your own plans, your own trading strategies. Good, but before we do that, don't forget to subscribe below, comment and like. Good. The first strategy, it's a very simple, it's a very basic trading strategy, so we can give you some food for thought, right? So at the top of the rally, near a resistance area, we identify a long black body. Now, the presence of the long black body along with the presence of a resistance, it makes me feel more confident to press the trigger. To press the trigger to sell right below the low price of the long black body, and always to place a protective stop loss at the high price of the candlestick. Always place a protective stop loss. I personally do that because you never know what is going to happen next. The market might go in the opposite direction than expected, and we need money, we need funds to trade later and tomorrow. So by placing a protective stop loss, we cut our losses short. We can accept predetermined losses, so we do not have any unexpected results regarding our profit and loss. Excellent. Now that we shorted, now that we open a sell trade, what about our potential take profit? Now, in this simple basic strategy, we're going to book all our profits. We're going to close all of our trade at the 200% level. This implies that we have 1-to-1 risk to reward ratio. The distance between the sell and the stop loss is the same, is equal to the distance between the sell and the 200% level. 1-to-1 risk to reward ratio. Again, this is a basic strategy. Let's go on and improve it a bit. Now, the same scenario, an upward rally, a rally to the upside, and near a resistance area, we locate, we spot a long black body. We're going to place a sell trade at the right below the low price and place a protective stop loss right above the high price of the candlestick. Now, the first take profit level is going to be at the 200% level, and we're not going to close all of our trade, but part of our trade, and we're going to allow another part of our trade to run even lower, so we can book more potential profit, if any. And this is the case in this scenario where we close the remaining of our position of our trade at the 300% level. Excellent, good. Do you like it? Don't forget to subscribe below. Another improvement to our strategy, an upward rally. We identify the long black body near a resistance area. Now we have two reasons to open a trade, and of course we do that right below the low price of the long black body. We place a protective stop loss right above the high price of the long black body, and we're going to close part of our trade at the 200% level, right? And another part of our trade at the 300% level, and we're going to allow a small part of our trade to run even lower for more potential profits. But in any case, when we identify any reversal pattern in the opposite direction, we're going to close the remaining of our position, the remaining of our trade. And this is the case in this scenario where we identify a reversal pattern to the upside, a hammer, remember the hammer, and here is a good excuse to close the remaining of our trade. Of course, as I mentioned many times, the 200%, the 300%, it's not written in stone. You can choose your own percentages, or you can choose your own Fibonacci extensions if you wish. And of course, we are going to discuss, we're going to dedicate Fibonacci extensions, many hours, many minutes on Fibonacci extensions. Good. Now, one more variation, another strategy if you wish. Here we have an upward path, a rally if you wish, an uptrend. And during an uptrend, we can draw an uptrend line by connecting at least 2 points, at least 2 low prices. And when a candlestick violates this uptrend line, then it's a good alert to start thinking of going south, of selling, of closing the long position, of closing the buy position, and perhaps opening a sell position. And this is the case right here in this scenario on our screen, where after a beautiful rally, we see a long black body violating, breaching, penetrating the uptrend line and closing below the uptrend line. Now, here is a good excuse to open a sell trade right below the low price of the long black body, and of course place a protective stop loss right above the high price of the long black body. Of course, you can combine this strategy with oscillators, being, for example, your favorite oscillator being in overbought area zone, and along with this scenario, it's going to add more confidence in your hands. Good. I hope you enjoyed it, and don't forget to subscribe below. See you in the next educational video.